Okay, so welcome everyone. All right, hope you guys doing good. Okay, so this video is on entries and risk management. Okay, so by now you guys already know. By watching this video, you guys supposed to already know where to enter, and you would have like a clue of risk management. Right, this supposed to already be something in the back of your guys' head already, but I'm just gonna go a little deeper, or just this is just the main topic for this video. The way how this course is structured is like everything is in every single video you watch. So if we're on this topic, you guys already know where I enter. You guys already know risk management, but this is just a topic. So by the time you reach to the end, everything's supposed to click just like that. Okay, so risk management. So if you have an account and it's a live account, I recommend you risking 5 to 10%, right? And basically, what that means in simple terms, you're risking 5 to 10% of your total amount of money. So if you're risking, like say, if your account is $1,000 and you risk $50, that's 5%, right? So if you risk $50 and you make like a 1 to 3, 1 to 4, that's $200 right off the bat. If you risk $100, you make a 1 to 3, 1 to 4, that's $300, $400. You get a 1 to 5, 500, 1 to 6, so on, right? And with the funded account, I recommend 10%, like just standard 10%, because it's not actual capital. I mean, it is once you get the money, but it's not actual capital. This is like other people money, but this is more serious, the live account, right? You don't have to risk, because if you have a 100K account, or let's say $1 million account in this case here, and you risk 50K, right? And you get a 1 to 4, you just make 200K. You don't, right? Right? That's 200K, that's a lot of money, right? Likewise, if you risk 100K, you make 500K, right? Simple. So, but with a prop firm account now, funded account, like just keep it standard until you reach to the live account. And this is just my advice. This is not financial advice, okay? So risk according to your appetite, but this is my recommendation because this is what I do. So yeah. So with all that being said, let's go. Alright, so as you guys already know, this black line here represent my focus point, right? And as you can see here, I'm on the 1 hour time frame. It could be the 4, because we do analysis on those two mainly, right? And this here, as you can see here, this red represent price is going down and the green represent price is going up. Alright, so this is basically showing you that price create a low, this is a low, higher, this is a low, this is the last high, price break through that high, right? And price come back to that point. This black here represent, this black line here represent our focus point, because we want to trade back above where sellers had control in the first place. So when we're back above that point, the probability of price continuing in that direction is much higher than below here, because sellers were here before, so people are going to try to sell here in the present moment once more. Okay, with market structure, higher high, higher low, price could come back and retest this, but this black line is our focus point. Okay, So with that out of the way, that's just a quick refresher. Price created higher high. We didn't trade this first here. Come down, come down, come down. Alright, price is back to that point. Price could even come, market could, let's, for this video sake, let's just zoom in a little bit. For this video sake, let's just put this here. Put this back up to the 1 hour. Nice. So you guys don't be confused. That's the last low there. It's the last support. Alright, nice. So now what we want to see is price back above this black line here. Right? But then you want to see price on the lower time frame, either the 15 or the 5, break a high above the high. Let me repeat. On the 15 or the 5, if you're buying, you want to see price break a high above the high. What does that mean? So this black line represents the last high slash the focus point, which is here. So above this high, you want to see price break a high, which is here. Let me just put an arrow there. So you want to see price break a high above the high. And what that simply means is on the 15 or the 5, you want to see that candle close above. So this green thing here represents a candle closing above that high, right? And what is this? This is time frame correlation. So on the 15 or the 5, when price break above that high, above this high, this is giving you confirmation overall on the lower time frame and on the higher time frame that price is now becoming bullish, because the analysis says on the 1 hour, let's just go back up, or the 4 hour, or even the daily. Hold on. Price made a high, equal low, or higher high in this case. So now price is gonna make a higher high, higher low, higher high, higher low, higher high. So right. So back above this level. I mean, we could take it here, but that's risky. You guys already know why we would take the buy here and why we take it here. So above that high, you want to see price break a high. So price was in a downtrend here on the lower time frame to come back to this level, right? Come back all the way down, let's say, to this level. Well, I'm gonna put this to red so you guys don't get confused, because some people will get confused. And then let's change this. This is not drawn to scale. It's kind of messy here, but bear with me. Let's focus on the lesson. So this was the last high above this high. So now you want price to break above that high, right? So once price break above that high on the 5 or the 15, that's going to be the best and most accurate entry you're gonna get, right? So right as price candle close above that area, you're gonna go for a buy, and then you're gonna put stop loss under one of these low here, and then bam, you just aim for the moon, right? Because price is gonna go up on an uptrend, right? And here you just aim up. And once more, you don't use a physical take profit, because price could just break, continue break, and you guys already know where we're going. It's a physical stop take profit, all right? But don't use a physical take profit. Just set alerts at the focus point, right? So that's where we would enter in this case here, and this would be the same here, right? This would be the same here, same exact thing here. Once price do that, you would enter above a high, breaking a high. Simple, right? Until price do the opposite. Price break a low, So now we're on a downtrend. So what we'd want to see is price break a low below a low, right? So below this black line here, let me just put this green. Bam, 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 bam. And then put this red. Bam, 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 bam. Put this red. Nice. Okay. So below this black line here, you guys want to see price break a low below that low. Let's just put this here. So let's just draw a little resistance line here, support line here. Bam. So below that level, you'd want to see price break, right? Bam. Put this red, and this is supposed to be on the 5 or the 15 because those are the lower time frames. So right as that candle close, you would enter. However, if the candle does not close, you don't enter, right? So you have to wait because sometimes you get fake out. Price will come, sometimes price would come down to here, and you're like, yeah, I'm gonna enter here, but no, price, the candle actually go down here, but then it didn't close there. It still closed here, and then it trouble here for a moment, and then it just continue picking up back, right? So that's why you should wait until the candle close. The moment candle close below this, it's now opening the door on the 5, and then after the 5, you guys already know that the 5 is going to go into the 15, and the 15 is going to go into 1 hour. The 1 hour is going to go into the 4 hour, and by that time you already have a lot of profit, right? So RTP hit or something. All right, so yeah, that's it for that there. And I'm not gonna even itch on that there, because let's say we enter here. Now we enter risk management. Let's say now we enter here, stop loss is above the previous high, and when you're selling, you're gonna go based off of structure, because we have high, lower low, lower high. So when we enter here, we're anticipating a lower low, right? So we entered here, and we're gonna go for the next sellers, the next buyers, right? We're gonna go to the next buyers, and the next buyer is gonna be here. So automatically, you know where the next set of buyers is gonna be at, and this is what we call trading, right? Because if you're, let's say you're selling something, right? You want to take it to people who's going to buy it. And how you know people's gonna buy it? Because in the past people bought here. So that means buyers are, this is a buying level, or this is a buying location. So you want to take whatever item you're selling. In this case, it's just price or candles. Say, let's say you're selling candles, whether it's trading candles or physical candles. You want to take it to people who would potentially buy it, right? And potentially people bought here. So you know that this is a location. Let's say this is King Street, just for argument's sake. When price come back to King Street, people bought at King Street in the last, right? In the past, sorry. So in the present, people are gonna buy. Potentially, there's gonna still be buyers here at King Street, right? So why you take it? That's why you take it there. And the reason why you wouldn't use a physical TP is because sometimes the buyers that's supposed to be at King Street is not there, right? So you would set alert at King Street whenever you enter here, but sometimes price will break below that, right? And then when price break below that, this supposed to be the last low here. You're gonna anticipate a lower high, which is here, so you could hold for a longer day. there, and then after a lower high you're gonna expect a lower low, right? So sometimes you take it here, sometimes you could take profit there, buyers will come in here, then buyers will come in here, then sometimes buyers will come in here, right? So this is gonna take even longer, maybe some days or so, right? So that's risk management there, and that's like a 1 to 6, 1 to 7, right? 1 to 3, 1 to 4, 1 to 5 sometimes, right? You rarely are gonna get a 1 to 1. So risk management here is out of the picture. That's called risk management. So you could, in theory, you could even lose 8 trades, which is highly unlikely using this strategy here, and you could win 2 trades and still in profit by just getting a 1 to 4 and a 1 to 5. And in this case here, using market structure and this theory or this fact, you could still come out on top, right? So that's risk management there. It's not nothing hard, so I'm not gonna even focus on that, right? So now I'm just gonna show you guys a trade that I'm currently in, and this trade I want you guys to go on the no trade zone video. I called out this trade here, right? And the reason I'm showing you guys this is I'm currently in a prop firm, right? And when I was making that video, I was right here, I entered here, right? And I was explaining that above this level we're gonna buy, right? And stop loss should be below this level here, and then we're gonna aim for like the moon, because the trend don't change from a downtrend to a uptrend, and the next king street would be here or even here, right? And this could take days or even weeks to reach back up there, but this is a prop firm, so you guys know you can't hold the trades. Well, on this prop firm you can't hold the trade for past 5 o'clock, right? So I entered here, then I entered here again Monday, but then I entered here again because it's a prop firm. If it was a live account, I would enter here and then I would still be in the trade to this day. So this trade would be Friday. Today is now Tuesday, so like over the week, let's say 5 days. Okay, let's just say 5 days in this case here, and then let's say 5 days here, but let's just go back on this trade here, show you where I enter, why I enter, where I enter. So you can see a lot of blue lines here, a lot of red lines. So the blue lines here represent where I enter, the red lines represent where I exit. So let's just go to the 5. I'm gonna show you what I'm preaching. So this gray zone here represent the high. So above this black line, I want to see price break a high. Above this high, which is this black line, I want to see price break a high, which is this gray zone here, because that's price going down. So I enter exactly on this black candle there, enter on that black candle there, bam, it looks something like this. Stop loss was here below this level, right? But then market came and market did this with this wick here, and then price still break that level, right? But which I re-entered, right? And I'm gonna show you why I re-entered. So let's go on the 15. So price did it on the 5, but on the 15, that candle here, look at this candle where I entered, this blue candle. This candle did close on the 15. It closed on the 5, but it didn't close on the 15, right? But after that happened, this candle happened. what this candle simply do, this is called a liquidity candle. This candle now take out everybody who entered here in the first place. Everybody who entered here, automatically they're gonna want to have their stops below the last low. What this candle did, what this wick did, is liquidate everybody. So take their money and shove it into this candle here, this 15-minute candle here. So price did eventually break this gray zone here, right? So that's where I re-entered. So I re-entered here. I re-entered here 8:45 p.m. with 2 contracts, but I saw that hey, price did done liquidate my 2 first contracts, so I exited one with this one. So now that's why I only have one here, right? So that's the story here. So price still break a high above the high, so that's why I re-entered, but I still use risk management by taking off one contract there, because I already faced a loss here and I'm not gonna like over leverage here. This is not revenge trading. This is what I'm preaching from last week Friday, and now price actually did what was expected. All right, so yeah, and this is one micro contract. So I'm gonna blur out this here. One micro contract, and I'm up 1,002. Been holding this trade for 16 hours. I'm not gonna even do the maths on that, but from 8 p.m. last night, I know it's price market is gonna close in the next 5 minutes. So that's why, that's just a con of using a prop firm. You can't hold the trades above, right? You can't hold the trades beyond 5 o'clock. So yeah. One more thing. This trade is gonna close in the next 5 minutes, but one more thing that I was preaching in a no trade zone video. So if you guys watch this video here, please go back to the no trade zone video, and exactly what I said was gonna happen. So now price is gonna close. So now this is my new high. This is the 1 hour time frame. Let's just remove everything. So now this is my new high. This point, or even this point, and then this is my new low. So this here, this gray zone, is my no trade zone, right? So even though this trade is gonna end, it's gonna close in the next 4 minutes, I'm still not gonna re-enter. I need price to come back here, back into this zone, and then when you go back above, then I will enter again. So yeah, that's just how I use this thing here. And this is pretty impressive because this is only 1 micro, 1,200. So yeah, that's impressive there. And as you can see, no TP. This line would be next focus point because people sell in the past here. So this would be a King Street where sellers are at. So that's where you want to take the buy. Okay, so yeah. So catch you guys in the next one.